How we doing? How we doing? Today is Thursday, the 11th of July, 2024. Just doing a real estate tap-in for today. So it looks like we're getting some inflation data. Looks like the data that we're receiving is saying that things are improving. So this is kind of going in the direction of a possible rate cut. Rate cut coming up soon. I think maybe sometime in August or September. I forget exactly when the Fed comes together and meets, but all indications of somewhat of a rate cut. But what I think that a lot of people are not paying enough attention to, or what is more of a catalyst for the rate cut, is that unemployment is going up. So that means that these companies are experiencing, some issues. So, you want to lower the rates to kind of spur more activity in the market. But when it comes to real estate, if you drop the rates, but more people are unemployed, how are people going to continue to make purchases? How are people going to continue to rent apartments, and buy homes if, we have a significant increase in the unemployment rate as we get to the end of the year? So the way I see it is that don't be the last person stuck with a property, especially a rental type of property. Now, if you're somebody that's going to live in the property as a primary residence, you can, withstand or kind of weather the storm of a recession, of some type of setback or decline in values. But if you're an investor, you need to, really be tight on your numbers, know who you're renting to, know their circumstances, see what type of situation that they're in. And because if you're gonna buy this particular time, because some of the things that I'm here in New Jersey, and we're in a more expensive market, one of the more expensive markets, it doesn't seem sustainable to buy an investment property at these prices. I'm seeing two families that need work, $600,000. Four families, $800,000. So to make those deals pencil for an investor, you're having to rent 2 bedrooms at close to $2,500. And how many people, 2 people living somewhere can afford a $2,500 per month rent? That's going to be taking up, close to 50% of their income a lot of times. And we're not talking top of the line type of properties, that have the bells and whistles, everything is new in there. We're talking about stuff that, could use some repair. So, definitely in some of these higher price markets, I just don't know how it's going to sustain, especially with unemployment rising. So what I would just say is that investors, you have to be careful, if you are buying now, and if you are buying at the top of the market, do you have a plan or the ability to withstand some type of downturn? And this downturn that comes, may not be one that's only around for 6 months. This may be a prolonged downturn. A lot of people, economists and things like that, is that, this recession could be, a difficult one. So make sure that you have those contingency plans in place if there is a downturn, because if you're buying now, like I said, you're buying most likely at the top of the market. So I think Warren Buffett said that, you start to see in times like this who's been swimming naked. You know, it was easy to get a property 4 years ago, 5 years ago. You know, prices just kept going up. So you could, at some point, just get out of it and sell it and most likely make a profit. But now we're getting to the point where you need to be, you know, a little bit more savvy, have more of an understanding, be a little bit more cautious if you are going to buy something. And if you're somebody that is looking to buy, you know, a property and live in one of the units and be able to, you know, rent out some of the other units to lower your monthly costs, you have to be careful as well, because if something happens with your tenants, are you going to be able to find another tenant that can pay what that tenant could pay? You know, and then if you can't, then that's obviously going to fall on you to make up that difference. So, you know, just be careful out there. I would tell people, you know, have some caution, and, you know, run your numbers, make sure your numbers are tight and see how things are penciling out. And also, you know, be thinking about what you may have to do or how you can withstand, you know, a downturn in a market. So, you know, I just wanted to come on here and say that, because some of these pricing, especially here in New Jersey, are just, it's just insane to me. You know, having to pay what you're going to have to pay, you know, has to be taken up close to 50%, if not more, of somebody's income. You know, paying $2,000, $2,500, you know, you need to have a combined income in the household of, you know, probably $150,000, and that's just to rent a 2-bedroom. And maybe people are making it, but if anything changes in the market, it could have some severe consequences, you know, for landlords, investors, and things of that nature. And again, this is why we try to do real estate notes, and we look to do notes, is because we can modify our note. If somebody, you know, gets into trouble, you know, loses a job for a certain period of time or whatever the case may be, we can modify our loan because we're the bank. And so, you know, maybe we don't get the payment that we initially set up for, but we can reduce it somewhat to make it still affordable and still make it pencil for us. But, you know, when you buy these rental properties, you can't necessarily do that. You know, you're factoring in the rent is going to be $2,000, $2,500 a month, and you can't, you know, make it $1,800 and still make the deal most likely profitable for you. So, you know, just be careful out there, and you know, make sure you understand, you know, where you're buying in the market and what's going on, and have some contingency plans in place. All right, everybody have a great day, and we will talk to you soon.